Good morning, welcome to this Phoenix Blue morning update on Monday the 15th of August. I'm Tom Colley and I'll talk to you about the markets and the news this morning. And we'll start with Friday of last week. We had some numbers in on Friday and we'd already talked about the Chinese industrial production figures on Friday morning. However, we'll have a quick look at the Shanghai Composite in a minute, so we'll come back to that. We had some German preliminary gross domestic product figures in above expectation, but this area here, Friday afternoon, we saw some really poor numbers out of the States on PPI, retail sales and consumer sentiment. In the instance of PPI, with minus 0.4 against a expectation of positive 0.1, so really quite significant difference there. And again on retail sales, we had a flat, no change, based on a forecast of an increase of 0.4%. So all in all there, we had a very negative picture on the dollar, and we saw the dollar react accordingly. We'll come on to that one in a minute as well. The only thing that we've had so far, very early this morning, was gross domestic product for Japan, which is disappointed at 0%. Against an expectation of 0.2%. Not a lot happening today. We've got bank holidays in France and Italy, so a little bit of lack of liquidity potentially in the euro, but that's not quite the same as Germany being on a bank holiday, for instance. And then over tonight, we've got the monetary policy meeting minutes coming out for the Aussie. The most significant other news event this week is the minutes of the last FOMC meeting that are due out on Wednesday evening. Those are updated right up to 10 minutes before the release, so we'll take account of most recent NFP figures, and whereas the statement came out and was very bland and non-specific, we might find a little bit more detail in order to build expectation on rate increases. Are we going to see a rate increase potentially September prior to the US presidential election? Or will we be waiting for potentially December after the presidential election? As we sit at the moment, my preference would certainly be December, if at all, but we'll be looking at those minutes in detail to see what we can glean from them. Okay, over in Asia, this is the Shanghai Composite. We haven't been looking at this a great deal. We've basically been bullish since this period here of, let's call it the post-Brexit period. We've been, in the last 2 to 3 weeks, ranging within these two support and resistance levels. Friday we had a very bullish day, and then overnight, their trading day for today, we've had a very, very bullish move. Now, I'm not particularly certain what caused this. Certainly the data that's been coming out of China has not supported that type of move. However, there has been quite a lot of talk from the Bank of China about focusing the next G20 meeting, which is the first week of September, the focus on that being about increasing global growth. So there may be a positive interpretation based on that. So we'll be keeping our eyes on the news around China and specifically the Chinese equities that we're looking at the moment. Over in Japan, the USDJPY yen exchange rate, well, Friday we were testing the 101 level. Were the Bank of Japan intervening at that level? Quite possibly. Difficult to tell. We have two other levels where we are convinced we saw post-Brexit intervention at $99 and again at $100. We will be interested in those levels as Bank of Japan intervention. Obviously 100 is a massive number. I think possibly this is the Brexit announcement or the Brexit result. I think potentially they simply weren't able to hold 100 at that time, so settled for the next level at 99. But we'll need to see, obviously, a breakdown to that level before we can see that tested. But as you can see, a lot of yen strength there. Bearing in mind, yen strength is to the downside, dollar strength is to the upside. Okay, over on the Japanese equities, the Nikkei 225, basically a retest of this 618 level overnight. We haven't had a significant move away. We will be looking to potentially trade this long, but in the first instance, we will want, for instance, the yen to get down to that 199 level, potentially causing long side on the Nikkei before pulling back and potentially taking it back to the long side. Dollar index, this was the one that was really interesting from Friday. This is Friday's bar. In the afternoon, we got all the bad retail PPI data, pushed price down really, really strongly. However, back towards the end of the day, or at the end of the day, price had closed not so far away from where it had started. So that would indicate that dollar strength remains, even into the headwind of significantly bad data. So our bias here is still dollar strength. We'll be looking to trade that dollar strength against weaker currencies. You know, it could be said that the dollar strength is really only there because of how weak other currencies are, but the reason doesn't matter. The simple fact is it's stronger than other currencies. This is the pound, and here's one trade that we took on Friday. Those trade lines are a new trade which we've got lined up for today, but that was price pushed up to the top of the channel on that bad news, on the dollar weakness, and then as the strength came back in, gave us a lovely intraday trade down there, which I know made upwards of 3% on that particular trade. Where we're sat at the moment, we're looking for another pullback to the trend line you can see here on this 4-hour chart. The reason we're using a 4-hour chart is when you factor in Brexit, there are sort of two charts. There's pre-Brexit and post-Brexit at the moment. So we're focusing on what we're actually looking to trade, hence the 4-hour. So we've got another entry short. Our bias is all short this market. We've been buying all the way down on pullbacks, and we'll continue to do that. We also had a nice trade on the Aussie. On Friday, you can see this daily bar here. This was, again, spiked up on the bad news, dollar weakness into that bad news on the retail from the US dollar. And subsequently, we found the downside returning as dollar strength kicked back in. So we've already got profits off the table, stops at break even on that. We've got a secondary order now lined up at this level through here. Today, looking for a smaller pullback to take it back down further to the downside. T2 targets at this moment in time based on this low here. Okay, over on gold and silver for that matter, they're somewhat similar. We're pretty cautious in these markets at the moment. We've been swinging somewhat from risk on to risk off. Worldwide equities markets are strong at the moment. Last week, as I think I mentioned, we had new highs being made on all the major US equities markets. However, they were very small gains, so in this respect, we are pretty cautious. We're looking either for a break to the downside and a retest of this double top neckline here, which you can see marked with the blue zone, or this is a long-term monthly trend line, or we see a break above that, pull back to retest that, and we get some long side there, which will be in conjunction with a sell-off in the equities markets. Friday I showed you a trend line that is replicated across all the major American markets, and if that's broken, then certainly we'll be back into a risk-off scenario in a big way, and we will see gold, silver, etc. moving quite strongly to the long side, even though we feel that the market, based on our commitment of traders analysis, is in need of a pullback. It may not get that if we get that weakness from the equities. One commodities market we're in at the moment, which somewhat summarises a lot of things that we do here at Phoenix Blue, is sugar. As we've already said, we are bullish the US dollar. Seasonality on the US dollar is strong for the next couple of months, which could be one of the reasons that we saw pound strength come back into the dollar on Friday. Add into that seasonal bullish dollar is enhanced when we have a presidential election year, which is exactly what we're in at this moment in time. So we've got two seasonal reasons to give us dollar strength. When we have dollar strength, we normally expect weakness in commodities against that, simply because commodities are priced in US dollars. Add into that, we've got a seasonal picture on sugar, which is short. And we've also, at this level here, we had a commitment of traders extreme signal, which the commitment of traders analysis was telling us this was likely to be the top of the market. We've clearly seen that. We've come back. We've got a double top scenario. We're in this trade. We'll be looking to take money off the table before this trend line here, which in fact is also the neckline of a head and shoulders formation. So we'll be looking to a break to the downside, a retest of that to take it for further downside, certainly down to around this 1716 level there, but potentially based on the seasonality of sugar, we have the possibility of being right down at these 1300 level down here. Okay, as I said, that summarises a lot of the factors that we take into account here at Phoenix Blue. If you like what you see there, if you like the way we analyse technically, fundamentally, we look at commitments of traders analysis, seasonal analysis, you've got the option to come along and find a lot more about what we do in that respect. On August the 24th in London, we have a free trading event. It's a 4-hour event where you can trade alongside our most senior traders. It's absolutely free of charge, without commitment. You also get the opportunity to ask as many questions as you like. You can also talk to Phoenix Blue members who've already benefited from our approach to the market. So if you're interested in that, just pop onto the Phoenix Blue website, register for the event there, and you'll get sent all the details you need to come and attend. Even if you can't make that date, it is a monthly event. Actually today we're actually also in Norway doing the same this evening, but we do it in London at the moment once a month. So if you go on and register and you can't make this next date, we can simply give you details in due course of the next event, so you'll be able to attend that. Okay guys, that's it for today. Let's hope for another good trading week. Take care, and we'll speak to you later in the week. Take care. Bye.